Hi, good evening, everyone. Yeah, am I audible? Good evening, um, Mr. Justin. Good evening, Pastor Emmanuel. Good evening, sir.
Good evening to you. I can hear you.
Good evening, sir. All right, good to have you online, sir. Yes, you're quite audible, sir. Loud and clear. Yeah, good evening.
Yeah, good evening, sir.
Yeah, good evening.
Yeah.
Good evening, Mr. Ife.
Good evening, sir. Yeah.
It appears we're having a double. The sound is. What's happening to the audio? All right. So, I would kindly request that we mute so that we can proceed from here immediately. Thank you very much for your patience. We ought to have started 5 minutes before now, but a little bit of delay. Okay. All right. Thank you very much, everyone. Once again, sorry for starting a little bit behind the schedule. So, today we'll be having a technical session on cryptocurrency trading, and I don't know what's happening. I'm hearing myself. I'm hearing myself. I think I know why.
It's
Just give
not
me a
so
minute.
here.
We
It's
can hear
okay.
you.
Okay, just a minute. I'm just a minute. I'm correct now. We actually live on YouTube. Yeah, we are live. Yeah, we are live on YouTube, and the YouTube tab is open. So let me treat that quickly. I'll mute that. Let's read. Is my screen visible?
Yes, it is. It is.
Okay. So what is currently showing is a slide of the Royal Q, right? So we double show.
Yes, yes.
All right, all right, all right. Thank you very much. Initial technical difficulties there. So, like I said, we are having this session in order to uh, put out the knowledge about cryptocurrency. We understand that as much as we have the noise all around us, there appears to be some gaps also, especially with a lot of fake investment opportunities out there. So it's important that we actually, find a way of passing across the right information so that people don't get duped or fall into wrong hands. All right. So this session is a double or even triple fold. We want to pass across the knowledge as basic as possible of cryptocurrency, and also to tell us an investment opportunity that is going on out there in case you're thinking of investing in cryptocurrency and you don't know how to go about it. And then thirdly, want to dive deeper into this particular investment opportunity and look at the technical aspect of it for some persons on the call that have actually gotten themselves enrolled with the program. Okay, so we called it $1 million roadmap because actually, with patience, uh, in about 3 years, your $500 could actually grow to as much as 3 point something million dollars because so far the robot or the bot has proven to trade with minimal risk and yielding a return of 10 to 50% monthly on your investment. So that's why we call it the $1 million roadmap, and it's a session on the Royal Q quantitative trading box. All right. So this is the disclaimer, a quick one. I'm not a financial advisor. Let me just share very quickly the YouTube link in case you want to uh, share with your friends. So the YouTube link is currently live. Please don't click on it until you are on mute so that we don't have an echo here. All right, so this is a disclaimer. I'm not a financial advisor. I'm not an accountant or any legally accredited individual qualified to give you financial advice. But this presentation is intended for educational purpose only and should not be taken as a replacement for a financial expert advice. So in case you are thinking of coming into this business, you need to do your own due diligence before joining the program. Okay, so um, the basic introduction here will be touching on the blockchain, cryptocurrency, and cryptocurrency exchanges, wallet, cryptocurrency trading, and then we'll move on to the trading bot itself. All right, so this fancy word, the blockchain, like many of us have had it time and over again. So what's the meaning of blockchain? All right, so I'll put it in very, very simple term. So blockchain is actually a distributed ledger. When I say ledger, like a document in literal term now, a physical notebook where you record transactions, all right? Sell, buy, whatever is happening within the business, you are recording the transaction there. So that's the ledger, all right? The inflow and outflow. So blockchain is actually a digital ledger, all right, that is connected, that is on a particular system, and then you have different systems having the same ledger, but they are connected to each other. Simply put, that is blockchain. All right. But the good thing about this ledger is that they are not just sitting on the particular systems, and these systems are not just connected. Any transaction that happens within that network, that transaction is copied on all the ledgers. All right. That means a copy of the transaction will exist on all the ledger, making it immutable, meaning that if you want to change, alter that transaction, you literally need to go to all of those systems. And a situation whereby you have a blockchain that has about 2,000 systems, all right? And one is in Tokyo, the other one is in USA, 100 of those in USA, and then you have some in Africa, a lot of them in Europe, in China. I mean, China has told some of these blockchain companies to vacate now. Hello. I'm so sorry. Am I audible?
Yes, you're audible.
Yeah, yes.
Apologies. I got disconnected briefly there. Okay. So, like I was saying before the disconnection, cryptocurrency actually sits on the blockchain. All right. So when you make transactions by sending and receiving, the record of that transaction sits on the blockchain. Now, when you are sending out your transaction, like when you are the one paying someone, you are confirming that payment with your private key. However, there is a public key that exists for the public. All right, that one is available to the public. That is what is used in signing the transactions in the public. So when you are sending a transaction from one person A to another person B, the 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 public key of that person, which is sometimes called wallet address, is what you use in sending that transaction, and that encrypts the transaction. And when it gets to that person, it is the private key of that person that decrypts that transaction, and the money will show it on their wallet. So those are a little bit more technical terms. Now the next point we go into is cryptocurrency exchanges and wallets. So we know already that cryptocurrency is a digital form, a digital money. All right. So exchanges are places where you can actually exchange these assets. For example, you can exchange Bitcoin for Ethereum. You can exchange Bitcoin for the real USD fiat. You can exchange Bitcoin for your USDT, which is a cryptocurrency equivalent of the USD. You know, they are parity. And then you also have wallets that cryptocurrency exchanges have wallet themselves, but you also have independent wallet where you can just save your cryptocurrencies, keep it till you want it. The wallet provides you with a private key, which if you lose hold of it, you lose that account forever with whatever asset is bearing. All right, so your private keys are actually very important. But on the exchanges, the exchanges have the private key. All right, so you trust them to keep custody of your crypto assets. Okay, so we have cryptocurrency trading. So on these exchanges, the act of exchanging an asset for the other is actually called trading. Okay, so the normal thing a trader would always do is that you want to buy cheaper and sell after some time so that you are able to actually make profit. So cryptocurrency trading happens on the cryptocurrency exchanges. Okay, and after that you have the bot trading. So this is where it gets very interesting. Okay, the bot trading. So what are bot trading, or what is the act of bot trading? What you do on the cryptocurrency exchange as a trader is actually, you know, very, very limited. Okay, so what bots do is that they take the place of human when it comes to trading. They take the place of human when it comes to trading, so that you can actually rest, and the bot will do what you would normally do as a human being. Okay, so that is the advantage of bot trading for you actually. All right, so so the very opportunity that we're presenting today, talking about bot trading, makes use of a particular method of trading, okay, which is called quantitative trading. So the dictionary or online definition of quantitative trading consists of trading strategies that is based on quantitative analysis. What this essentially means is that you are doing some computation, you are doing some number crunching, you are doing some analysis to actually decide the decision you make in a trade. Okay, you are saying, okay, I want to buy at so price, I want to buy when there is a dip by so percentage, and then I want to sell when the market rises by so amount of percentage. oh, I want to buy when there is a rapid, rise in price, or when there is a sudden dip in price. Suppose you are writing an algorithm that says when there is a dip of 10% within 2 minutes, all right, I want you to make a purchase at that point. So if you are lucky enough and you make the purchase indeed at a very good price, good for you. Those sudden dips that happen. So quantitative trading is actually when you are trading, giving this instruction to a robot. All right, if you were to be doing it on your own, there's a limitation to which you can't go actually, because you definitely cannot be trading 10 to 20 different coins at the same time. You know, especially those decisions you want to make within this, split seconds. All right, so this is what you have about quantitative trading. They rely on mathematical computations and number crunching to identify trading opportunities. All right, so the crux of today's conversation will be focusing more on the Royal Q trading bot. Okay, so Royal Q is a quantitative trading software that leverages on the power of artificial intelligence, cross-exchange data crunching, and optimization to trade 24/7 in the cryptocurrency market, right? So if you want to hold the cryptocurrency, the first thing you ask yourself, how do I get it? And I tell you, it's very, very, very simple. An average cryptocurrency exchange, you can get an account there just within 2 to 5 minutes. Your account is up and running. And if you want to go further in your verification might take just about 20 minutes maximum, depending on what you need to do. And your account will be verified. And once your account is verified, you can trade even to the tune of, millions of dollars on the exchange. So it's as simple as that. Now, that is you doing that. But what Royal Q does is that it leverages on the power of artificial intelligence. It receives data from exchanges and analyzes this data, all right? Like I made mention of what quantitative trading is. It analyzes this data, it optimizes the result to make sure that, the decision I'm about to take is on point, and then it applies this decision in the cryptocurrency market to trade on your behalf. Okay, so this bot trades only in the spot market, making it of zero trading risk. And when I say zero trading risk, I'm doing a comparison between spot trading and leverage or margin market. Okay, so those who are a little bit familiar with cryptocurrency trading know what bot trading, spot trading is. So what spot trading is basically is that you go to the exchange and just buy like you would buy in any normal market. All right, you buy an asset either at that same point in time that you go there, and then you buy it and keep it for your for whatever reason you have, and then you probably want to save it for the future, or you want to watch it while the price of the asset rise a little bit and you sell it. All right. Why we say there is zero trading risk is that in some other markets, all right, where you are heavily leveraged, for example, there are some markets where you are leveraged about 10x. 10x means that if the price of that asset should depend, if you are longing, if you're on the long, if the price of the asset should rise by 2%, 10x means that you would have made a profit of 20%. Okay? If the price of the asset should rise, if you're still longing, and the price of the asset should rise by 5%, and you're on 10x, you have gained 50% on that asset. If the price of the asset while you are on 10x should rise by 10%, all right, you have gained 100% on that asset. Now, this is the downside of leverage trading. If you are longing, like you're saying the price will go up, and then you long your position, and the price reverses. So if the price should reverse by 10%, all right, the total worth of your asset will just be equivalent of whatever position, whatever has happened. So in that case, you now hear what they call liquidation, meaning that every of your asset that you have will be sold so that you don't get to the position where you'll be owing the exchange. That is the disadvantage with leverage trading. You can lose your asset, your money, you can lose it completely. But in spot trading, even if the price goes down by 50%, your asset is still there with you. When it is time, you can sell it. All right, that is the big advantage. So ReaQ trades in the spot exchange, and then the bot is designed to only take profits. Now this is interesting. I'm repeating only here. It is designed to only take profit. All right, it doesn't close your position. It doesn't trade at a loss. So it makes profit for you only. If the market goes down, it waits until the market recovers back. And even when the market is down, it has a very beautiful strategy that I'll be showing us later of how it can buy and still make good use of the market for you. It consists of an active team that is committed to continuous improvement and upgrade for better performance. The user interface is very easy to understand, and it integrates seamlessly with Binance, which is the biggest crypto bank in the entire world, with I can't even estimate their liquidity, but their trading volume is in billions of dollars. All right, and then Huobi Exchange. These are very, very big exchanges. All right. So, how does this bot work normally? For those who have attended this session in time past, I had also mentioned how this bot works essentially. So how does this bot work? Someone wants to know, how does it work? How does it trade essentially? How does it trade? So I'll tell everyone now how it trades basically. So this bot, like you will do as a normal human being trading on the exchange, you buy when it is low and then you sell when it is high, and between that you take your profit. So if you are committing an asset of, let's say, $100 onto a trade, and you buy your asset worth $100, and by your setting on this bot, you are instructing the bot that when the price rises by 2%, when the price rises by 2 or 3%, sell for me. So the bot is getting ready, referencing the purchase price and waiting for when the price of the asset will be 3% more than the price at which it bought. And when that time comes, the bot will sell your asset, shed the profit to your account, and then use that $100, which was your initial purchase amount, to buy again. All right, so I'm going to do a very, very quick analogy here right now. So let us suppose that you initiate your bot at this point. All right, let's suppose you initiate your bot at this point, and then you decided that, okay, I want this bot to sell off when I have made a profit of 2.5%. So the bot will take note of the initial price here. I'm using Bitcoin here, but let me just assume that this is 40K. 40K. So when the price rises by 2.5%, let me assume 2.5% to be around here. All right. The bot will sell off whatever the $100 amount that it bought here. It will sell it off here. All right. 2.5% of $100 is $2.50. All right. It will sell it off here and use this $100. This becomes your profit. Use this $100 to buy here again. Good enough. The market keeps going up. Another 2% happens here. It sells it off. That's times 2. Another 2% up to here. So it made 4 different sales times 2.5. All right. So you are having about 10 USD there. $10 has been made on this rally. So instead of going up, you begin to see a decline. All right. So in this first candlestick, let's assume that there was a decline of about 2%. You would have included in your bot that after you have purchased, when there is a decline of 2%, buy. All right, so maybe what you indicated was buy $50 what? All right, so when there is a decline of 2% in the price of the asset, it will buy $50 what and add to the $100 you had initially. All right, so when the price goes up, again, like you're seeing in this next candlestick here, oh, sorry, like you're seeing in this green candlestick here, when the price goes up again by 2.5%, it will sell the $100 and the $50 together. All right, so let me just assume that this is a single movement. This part is a single movement. So let's suppose the price now goes down up to about 10%. All right, it will check what is the instruction given to me when the price dips by 10%. Let's suppose you say when it dips by 10%, buy $200 what? So when the price dips by 10%, it buys another $200 what? Mind you, it has $100 it bought up here. All right. So when it dips this 10%, the $100 has become 90. Not worry. In terms of its estimate, what at that point. So when you are buying 200, you are buying 290. I mean 200 and your initial 100. Let me just put it that way. And then you have 300 worth of investment at this stage. Now, thankfully, the price goes up at this stage and keeps going up again. When it meets the 2.5 more than your capital or your present asset value or your invested amount, is going to shed it off again and buy the $100. So this is what it keeps doing for infinity, friends. It keeps doing this, and this is the only reason why we say that if you know what you are doing and you allow this bot trade for you, with this mini profit it's making, yeah, we call it mini profit, but it amounts to something. I'm going to show you something on my own account later for you to know that this is real. So at the end of the month, we are able to compute that for a very bearish market where things are very, very low, you can still have 10% on your capital at the end of the month. And then when things are very, very sweet in a very beautiful market, you can have up to 50% on your investment. People that have been on board for some time now can actually tell you how real and how realistic this is. Now, the fact that cryptocurrency goes up and down is the more reason why you should consider this option. Because if you are comparing yourself with someone who just bought the $100 and was waiting here, just bought the $100 and was waiting. So before his very face, before his very eyes, the $100 will go up about 20% at this point and be worth $120. Okay? Because he's holding right before his eyes, the worth of the asset will come back to $100 here and even go below $100 to about $92. Now, the difference between you and that person is that by the time this guy looks the next time and sees that his asset has dipped, buying, let's say, if this were to be daily candlesticks, so this might be after about 15 or after about a month, he sees that, man, this thing went up and then it's down again, and I'm even losing $2 of my $100. I wish I had sold when it was $120. Anyways, I know I'm keeping for the future, so I don't need to bother. The difference between you and that guy is that along this whole journey, you have made about $20 to $30 extra. All right, $20 to $30 extra. In some cases, even more. So when there is a dip like this, all right, when there is a dip like this, you have taken advantage of the journey before that dip, and you have more money relatively comparing to this other guy. All right, so you are buying the dip and you are selling at a higher price, shedding your profit. I hope you guys are following. If you are following, just say I'm following. Just let me feel the energy in the room. If you are following, just tell me you're following.
I'm following.
Yeah, I'm following.
All right. Thank you very much. Thank you very much. So the next point we're going to look at is the interface of the bot. I'm still going to do this practically. I'm going to show you my own screen later on, and I'll show you how all of these things work. So when you connect to this bot, the first thing you want to do is activate. I mean, once you download the app, the first thing you want to do is activate. And the activation is your only commitment here. All right? The activation is your only commitment, and the activation is 120 USD per year. Is an annual subscription. Of course, something this good with a lot of what do I call it now? A lot of maintenance at the back end needs some amount of money. But interestingly, the $120 you are paying is not even going to the company, and that is an interesting part. The $120 you are paying, okay, 90% of that money is actually being shared within the ecosystem among traders like you and I. All right. So when you register for $120, I think the amount that goes to the company directly is just about $10 or so, or even less than that. But the remaining money is shared as referral bonuses to people within the ecosystem. That is why one of the other things in this program or in this business that is highly and very lucrative is the referral program side of things. In case you are not satisfied with the 10 to 50% profit on your investment, depending on your capital, you want to explore the referral system, it's absolutely very, very, very beautiful. Okay, so going back to the interface, once you activate, after activation, you are now free to connect your app, your bot, to your exchange. I forgot to mention, friend, that this bot is not where you keep your money. Your money resides in the exchange, that crypto bank. That is where your money resides, your capital, that's where it resides. So this bot is only a trade utility. You connect to it. That is what you do with this API binding here. So this API binding here is for connection. So when you connect this API, when you connect this bot using this API binding protocol to your Binance account or your cryptocurrency exchange account, you are now able to use this bot to trade on your cryptocurrency exchange account. This bot now has access to trade. It will open position and close position, meaning that it will buy and sell, buy and sell. Keep doing this till you tell it to stop. It doesn't stop. All right, except you no longer have except you are no longer ready to trade. And this revenue tab is where you have your income. Income will be showing here. All right, and this is for reward details, those who will be participating in the referral program, and in case you want to invite your friend, this is it. So the assets you'll be trading will be are listed here, and so many of them. All right, this is a similar interface. And then the third image you're seeing here is very important, especially for new entrants. You might be asking, I don't know too much about this thing. I don't understand how it works. Yeah, every one of us we were once at that stage at one point or the other. So this is where you find experts who have been using this bot for some time, who themselves have also been trading for some time. So they understand the market. So they have mastered how the market works. And so therefore, their strategies, all right, are here for you to just copy. So when you copy the strategy, they collect just a very, very meager amount from you, which is 1%, sometimes even lower than 1% of your profit. So if you make a profit of, let's say, $10, for example, they are collecting, how much is that? They are collecting just 1 cent or 10 cents from that $10. I mean, it's very, very, very negligible. You shouldn't even think about it. So when you connect to these strategies, you are able to just let your bot run without any hassle. All right. Whenever they make corrections to the strategies at their own end, it will also affect your own trade positively, because when they are monitoring the market, so they can adjust the strategy, and it will also affect your own market, your own coin directly, because you are synchronized with their strategy. Now, what you see by the right hand side is a typical record of the bot trading. All right. So let us just try and focus on this comp. All right. So you see the last thing there, the one below, comp sold here. It sold what it was having. It made this profit, this percentage profit. This is based on the setting, all right. And then it instantly bought.
About Francis Howard's
all right. Is anyone having a question? I'm hearing some noise there.
Facebook's
I'm hearing someone
research
talking. Is anyone?
that it causes mental health problems and eating disorders in kids. They know it's worse.
All right. So sorry about that brief. So it bought here. All right. At this second, let me emphasize it. So it bought here, right? It bought at this price. Okay. If I had clicked on it, the details will come out. And then here it sold what it bought there. You see the price has increased. All right, the price has increased by 0.77%. It sold it there and made a tiny profit. This is, if you want to compare this to sold here, you see that you can actually make bigger profit. But this was by the setting. I think the setting here was around 1%, and then thereabout. And then immediately it sold, you can see it bought instantly. It does this by itself. Once you put the setting there, it does this by itself. It bought instantly. Don't be worried that the price is buying is higher than the price is sold. Yeah, it's a normal thing. So once it sells, it is by the setting it buys immediately. But if you want it to buy at a cheaper price, all right, there is also a setting there which is called a buy-in callback, meaning that you want there to actually be a reduction in this sell price before you buy again. You can actually do that. All right, and then and so on and so forth. It keeps doing this and doing this and doing this till you tell it to stop actually. So I mentioned this initially. The activation fee is $120, and then your gas fee, your initial deposit of gas fee is $20. So what is gas fee? Gas fee is actually the token amount that the bot will deduct for every profit you make. It doesn't deduct on your capital. So if you make a profit of $10, for example, the bot will remove just $2. All right. So before this $20 is exhausted, because it takes it gradually, before it is exhausted, you must have made a profit of $100 in your Binance account. You must have made a profit of $100 in your Binance account before this $20 is exhausted. You must have made a profit of $100. All right. So I was telling us about the referral program. This is the referral system. It's massive. I don't have much time, telling you every detail here, but simply put, it is massive. And that brings me here. This is a testimonial. This is a testimony of the referral program. As you can see here, this is what some persons are earning daily. All right, and this is a typical V6, the highest level here. This guy is earning, in case you want to consider the referral program again, I repeat, this guy is earning $11,728 on this day, 11th of September. All right, on the 10th of September, as you can see there, he got about $15,500 plus commission coming to him. And the further dates, this same person, look at the amount he's earning, even during the dip. It's just too sweet to ignore. But in case you are the person that you are not the type that actually likes this referral thing. This is the reason why we organize such sessions. So all you need to do at this time is just to send the invite of this meeting to your prospects. Tell them to attend this opportunity. You're already taking advantage of it. If they think it's worthwhile, then they can register. And when it's time to register, we'll definitely redirect them back to you. So all you need to do is give them the link. We'll be here to answer all their questions. So you don't need to do much. So in case you are considering the referral program, this is the approach or the way to go. All right. So that is that for that. And so today we are going to be going through so I'm going to be taking us through the app itself. All right. I'm sure that some of us might be having questions. So I'm going to connect now with my other device and share that screen. and I'm going to show us a couple of things there so that so the first thing we're going to be doing now is going through the UI, right? Just a minute, please. Let me connect. So we'll be going through the UI live. I'll be showing us how the whole thing works. So at this stage, if you have any questions, I'll be glad to answer your question before I come up with the slide on the UI. Is anyone having any question right now? I'm sure there are definitely lots of things that need clarification. So is anyone having any question? Anyone?
Yes,
Any
I
question?
have a small question.
All right.
Okay. There is this confusing stuff when the market is bearish
Okay,
and
sir.
the percentage is becoming too high. And you
What
find out
percentage,
that
sir? What percentage? What percentage? Are you
I'm
talking
just
about the floating?
not let me check what you call it. Sorry.
Okay.
You're not okay. I don't know what you call it. I can't see the exact name here. That's
Is it
the
floating
minus sign.
loss?
Not floating lost. Not the other one. There are changes. There's let me
Is
use for
it
instance
on
now
this? Is it here?
on this royal
What
queen
you're
here on
referring
this
to?
royal queen. Let me use for instance now we have this Shiba Inu.
Okay,
Are you
Shiba
with me?
Inu.
Yeah, Shiba
Yeah, I'm
Inu,
with
and
you.
as we're speaking now, it's actually at minus 11%.
Okay. The
And
24-hour price change.
yes.
Okay.
Now for the past 2 days, there have not been
Okay.
any trade on it. Is
Okay.
there any
That's
way?
good.
Is it possible? Should I continue?
Yeah, go ahead.
Okay. Is it possible to kind of stop it at that then, and then look for another coin that have the perspective of buying and selling within the next 2, 3, 4 days? Or should we just maintain on those coins as we have set it, or as we are following up on our upline? I don't know if you understand me.
Yeah, I
What
get
I
you.
actually meant is that when the is bearish and the bearish is becoming too low, that no trading is being done within a day or 2 days, depending.
Yeah.
Is it possible to change to another coin that you are seeing the possibility of having some trading on it? That's my question.
Okay. Yeah, I get you. Yeah, thank you very, very much. And it's an eye-opening question, and it's a very, very practical question as well. I'm going to answer your questions. Okay. So what you just mentioned is one of the things that first timers see, and they're like, "What's going on here?" Okay. It's one thing for you to initiate your trade, and you start seeing profit. Now, I'll say this. You will see your trade turning out profits, when the price is up compared to the price at which you bought. All right, you will see your trade turning out profit when your trade is going up compared to the price at which you bought. Another time that your trade can sell even at a lower price compared to when you bought. I'm going to give you that example now. We are already in the practical session technically. So I'm going to give you that example now. Let me open a black screen, and I hope you are still online.
Yes, sir.
Okay. So let me open a black screen now. Now, is my screen visible? I'm on the black screen right now.
Yes, it's visible. It's very black.
So let's assume that you bought an asset worth $100, and you bought it at 1.5. Oops, sorry. Just got disconnected from that screen. So let's say you bought an asset of $100. Okay, you bought it, let's say, at $2 worth. Okay, so you must have bought 50 of that coin, right? And then the price now dips. I mean, let's use the worst case scenario now. The price now dips to about 1.5. Can someone tell me how much percentage this has dipped now? It should be around 25%, am I right?
Yeah.
Okay. No, this is 25%. So this has dipped by 25%. Okay. Now, this is how RealQ works. Take note. So let's suppose at this dip of 1.5, take note your average buying price for this 100 is $2. Okay. Let's suppose you now bought at this 1.5, you bought another 200, you bought another $200 worth. Okay. So what would your average price now be? The average price will now be around take note, this is 3 parts. So your average, this thing, it will not be at the middle. It will not be at the middle of 2 and 1.5. It will be closer to 1.5. So let's say your average price will now be 1.58. Okay? It will not be 1.75. No. Let's say it will be around 1.58. That mathematics can be done later. All right. So what I'm just trying to say is that your average price will now be your point of reference for your trade. Now, when the time is ripe, let's suppose your setting for profit is about 1.5%. When it is 1.5%, please take profit. Okay. So your initial average price when you bought for $100 was 2. So when the price dipped to 1.5, okay, you'll be seeing 25% drop already. You'll be seeing 25% drop in your floating loss. 25% drop. All right, and 25% drop means that the total worth of your asset will now be about $75 worth, because you see a floating loss of $25. All right, but if you are buying $200 at this point, all right, whatever you are losing now will now be 25, which you have lost on the 100, over 300. All right, the percentage of these will definitely be less than 25%. The market, the coin itself might be showing 25% dip, like you're mentioning about Shiba Inu right now. The coin might be showing 25% dip because you bought at this point, let's say when the coin was just about 0% change in 24 hours. And then from this point that you bought, the coin started dipping and it dipped 25%. Are you following me? So this 25 to the ratio of 300 that you have spent, okay, is less than 25%. Do you understand? So let's even see if 5 is here. We have 5. We have 60. We have what's this? 5, 1. We have 12. So what is 1 over 12? What is 1 over 12, guys? Somebody help me. What is 1 over 12? That's about 12%, right? Am I right? Pardon my mathematics. So what we're trying to bring out is this. What we're trying to bring out is this, guys. When you are buying the dip, the impact of the dropping price will be less on you. Okay? So what now happens now? When this trade is preparing to take profit, it will no longer recover, it will no longer be waiting to recover 25% before it sells. This trade, okay, thank you very much. So this is 0.083. So this is just 8.3%, friends. You bought $200 worth when the price dipped 25%. These are the things I'm going to be showing us now when I want to talk about the strategy configurations, when you want to set your, when you want to design your strategy. All right, so you are buying $200 worth times 2 of your initial purchase when the price has dipped 25%. Immediately you make that order, your 25% dip in your asset worth will turn to 8.3. Okay, now if you had bought 300 at this stage, what do you think will happen? Your 8.3 will probably have gone to around 6 point something. Somebody can do that computation. So what is this telling us? If the price of Shiba Inu should go up and the dip turns to about 19%, or the dip turns to about 18%, you will start making profit from there. You will not need to wait for 25% to recover or recovery, on Shiba Inu before you start making profit. So that is the advantage, the main advantage of buying the dip, and the bot is configured so. So if you have enough money, I mean, that's why when you are investing in this, for example, let's say you are investing $1,000, all right, and you want to open, let's say, 10 different strategies, meaning you want to open 10 different coins, all right, your advisor, somebody like me, would not tell you to buy for the 10. You want to buy $100 for coin 1, buy $100. I mean, at that first buy, you have exhausted your $1,000. So the normal way of doing it is that if you have $100 for each coin, for 10 coin now, 10 strategies, that means $100 for each coin. All right. So for that coin A, what you normally do is that your first buy will be 10% of your capital. I hope somebody is following. 10% of your capital. Or say you want to play it a little bit risky, so you can go with 20%. But I will always recommend 10%. Now the meaning of this is that you have $80 dollar. You know, dollar is a stable coin. It doesn't get affected by up and down. All right. So you have $80 safe. No issue with your $80. So what the $80 is waiting for is this. If this $20, 20% of 100 is $20, yeah. If this $20 that you have purchased, the price dips on this $20. Suppose by your setting you say if the price dips by 5%, but buy another $20. So this bot will buy another $20 of A, worth of A. Immediately this trade of $20 is initiated. You know what happens? This your dip will turn to 2.5%. So if the market itself has lost 5%, because you have bought at a particular point in time, your own relative loss now is 2.5%. Suppose your setting is that the market keeps going further, this is 2.5. Your next setting after this 5% might be another 5%. Okay, so what happens is that when the market dips further, in this case, let's say the market, okay, this is the real market. It has dipped from 0, it has dipped to 5%. At this stage, you bought this. When you bought, your own dip, your own relative change now is 2.5%. Your next setting is another 5%. So by that another 5%, 2.5 to 5 is 2.5. The market has dipped 7%. So by another 5%, probably you are saying buy another $20. $20 what? Sorry. All right. So when you are buying this $20 by at another 5% dip, all right, your total dip, although it will still be more than 2.5, might be around 3.5 or something. Somebody can do that calculation. So what that means is that while the market is at 7% dip, or in some cases 10%, you need only about 3.5 to 4% rise before you start making profits. Whereas somebody who is not buying the dip will weight the entire 7% dip. So for those who are copying my strategy, I have a I have a strategy that prepares me for the dip, because I know that dip can be very painful. So the kind of strategy I have, if the market should dip, in very rare scenarios though, but it happens. If the market, for example, it can happen for Shiba Inu. Shiba Inu has grown 300% within a week. So if it dips 40%, it's not strange. So if the market dips 40%, the real market itself, the kind of strategy I have, the dip you'll be having will just be maybe around 10 to 15%. Those copying my strategy, they may not know what it means now, but when there is a major dip, that's when they will know. Because in my strategy, I'm buying at 2%, I'm buying at 5%, I'm buying at 10%, I'm buying at 20%, I'm buying at 30%, I'm buying at 40% dip. 7 margin calls. So what this means is that before I will be buying at 40% dip, that means the market has gone down to about 60 to 70%. So my 40% call may not even happen. All right? So that's the idea. So I hope you have gotten what I'm saying. So what I'm saying in essence is that, please, when the market is dipping, you have to be patient. If you have money, make sure your margin calls are working for you in the dip. All right? It's a normal thing for dips to happen. It's a normal thing for dips to happen. So the bot will do its work. So what you just need to do is that be calm. But if you have extra money, it's always sweet when there is a dip, because your extra money will buy the dip for you. And when the market is recovering, all right, your dip, your whatever you have purchased will start making money for you. Now, one other aggressive thing I did, I'm still going to mention it later, is that I asked myself, I said, if I had to wait for this market to recover, let me make a substantial profit from my purchase in the dip. So, whereas I had said my first buy should just make a profit of 1.5%, those things that are buying at the 5th, or 6th or 7th margin call, I gave myself, I said, you 5th margin call, I want a profit of 5% on you, if it ever gets to you. You 6th margin call, I want a profit of 10% from you. And this is actually very easy. If Bitcoin should dip, let's say suddenly, by 10%, you know that within a day, Bitcoin can rise 5%. So what am I saying? Whatever has been purchased at the 10% dip, you can still make a profit of 5% on that if the market goes 5% from that point. Okay, so this is the beauty of it. So don't let don't let temporal stagnancy, if I may say, or when an asset is not profiting, don't let it disturb you at all. No, don't let it disturb you at all. You need that stamina, all right, to withstand it, because even traditional traders, when the market is bleeding, like they say, for me, it has become a normal thing. This is what I've been doing for the past 5 years. So for me, it has become a normal thing. I don't even blink an eye. I'll just look at it and say, look at this market, and I'll go and sleep. It had happened in some days in my days of traditional trading. There are days I had lost up to 3 million within a day. But I don't touch my orders. I don't touch my trades. I don't sell off. I don't do that, because I know that when it goes down, there is every possibility it will come up. When exactly, I may not know. But you need to have an idea generally of what the market is saying. Presently, guys, we are in a bullish market. I believe that. Although some people are still having that some kind of mindset that it's still a good. No, I believe we are now in a bullish market. See what all those assets are doing. All right. So look at this very, very carefully and decide, what to do. But I would advise you shouldn't sell. All right, so be calm and let it be. If you have money, you can open another strategy on any coin you think is doing well. But selling any of your assets is in the that is having a floating loss, please don't do it. It's not a good approach, except you need money very urgently and there is no any other option. Then you can afford to lose whatever potential loss you have and just liquidate that asset. It's a long answer, but I have treated some other things I will be looking at in the technical in this session. So, Mr. Mark, I hope I was able to answer your question.
Yes, sir. Yes, sir. Yes, sir. Thank you, sir.
Okay. So, do we have any more questions, guys? Do we have any more questions? So, if we have no questions, I want to quickly show you guys a few things. All right, so I'm going to share my screen now on this other phone. So, all right, so the other one is disconnected. So, as you can see, this is a typical. Okay, let me just go to my real queue. So, this is the bot itself. So, this is the bot itself. Like I told you, the first thing you're going to be doing after activation, after activating your bot, is to come here and bind your bot to your preferred exchange. Okay, here I'm bound to two different exchanges because I have accounts on those two exchanges and I have Capital Z that are trading for me. So when you want to bind with Binance, you click on this. This is already bound, so I can't do any other thing again. So you do that. Okay. I hope my secret key is safe. Okay. So um, haven't shown that. The next thing we're going to look at is the reward. Okay. I'm going to be showing you this. For some persons who might be thinking, what are we talking about? So every day is not the merry day. Sometimes market trade is slow. Other times, I'm just 1 month and some few days. All right. Although whatever you're having is depending on your capital, but this is just to tell you that you can earn profit every day. So these are cumulative profits. Let me go into one of them and show you what's happening. So these particular assets, as you can see, these are the profits they are giving. They look very small, but this is the little thing that accumulates into the big thing you are seeing right there. All right. On this particular day, I made $39. All right. There are days. There were days in time past where where I had made something more. Look at this day of 57. All right. So that's just to show you guys what's there. All right. And you will definitely have a link in case you want to invite a friend. You copy this particular link and share with your friend. And this is reward details. So far, I've received a passive income.
Hello, Mr. Joe. We are you.
He's having some network problem on his own side.
Hello, sir. We have lost you there. We can't hear your voice again.
He's up from online. He had some technical issues. There's network issues.
All right, all right.
So he's already off from online. So maybe he will come back later. Let us just be patient with him.
All right.
I really appreciate your patience. I've been seriously battling with internet issues here. My Wi-Fi and even the mobile network of MTN is completely down. Just managing to. Thank you for still hanging on. Thank you very much. Yeah, thank you very much. So just before the disconnection, I was showing you this. Yeah, thank you for remaining online. So I was showing this. So from the period of my registration, within this a month and a few days, this has been my passive income so far. Now, this message is to those who want to consider referral program as part of the business. All right. If you only considering investing your money and being guided on how your money can yield something tangible in the long run, and like we estimated using compounding interest, that if you invested 500 USD, all right, a period of about 3 or 4 years without touching it, that money could actually grow to $3.5 million. And I mean, just do a simple interest of 20% monthly on an average over a capital of 500 and see what you get, right? That's the rationale behind that, because normally this bot can actually deliver that depending on the market situation anyways. All right, so this has been it. And then another benefit you get from this is actually what you call quantitative reward. And this happens for every trade that your just a moment. For every trade that those you bring on board, for every trade they make, the bot credits you with 4%. All right, 4% of their profits. So if suppose someone brought me on board and I am trading, All right, definitely someone brought me on board. So let's say I'm trading and I make a profit of $2. All right, 4% of that will be credited to the person who brought me on board. All right, so that's the beautiful part of it. And so in total, I personally have earned just $92 from the trade of persons who are just trading on their own. The bot has credited me with this. All right, so that is that for that. So I'm going to show us right now a typical strategy. All right, and how we can look at one of them. All right, so this is coin. I kind of like it maybe. Now this is how the interface looks like. Let me go back to the interface. So this is how the interface look like. All right, so this top part here where you see 201.6, that is the total amount I have invested so far in this particular asset. All right, and I was talking about the average price. I was talking about the average price to you guys the other time. So this is the average price here. You see at the top, 353. All right, 353.5. That's the average price. It was not the same as the initial price that this was actually purchased. And the difference between the average price and the current price that you are seeing here is minus 7.6%. So let's suppose I have $300 right now, and I buy using this buy option here, and I buy manually. Surprisingly, this minus 7.68 will be reduced instantly to about 2%. It therefore means that if this coin rises to about 3%, just 3%, I will start getting ready to make profit. That's the beauty in buying the dip. So you can let your strategy buy the dip itself, or if you have extra money and you think that even a coin that has dipped up to 20%, if you think that this coin is beginning to rise and you have enough money, you can buy a substantial amount manually and allow so that this your return rate will be less in terms of the negative percentage. And once that happens, a little movement on that coin will start making profit for you, even while the coin is still in negative, before the coin itself turns green and start making profit in the green side. So you will have been making profit right from the dip of the coin. So these are strategies that can actually help you get out of the dip faster, like Mark was asking the other time. All right. So the next option you see here is the one shot. If you don't want it to keep cycling meaning buying and selling, buying and selling, buying and selling, and you want to just sell it once at a percentage X%, then you click on this one shot. So once it sells, it never buys again. But the default is cycle, meaning it will buy and resell, buy and resell. All right. So there's another option here, as you can see, the strategy mode. All right. So when you set up your strategy, this first one, whole warehouse mode. So what the whole warehouse mode actually does is that it groups all your purchases, it groups them together, getting ready to sell them. Now there is also an advantage in this. The advantage is that if you are making up to 10 margin calls or more, all right, and you are using this whole warehouse mode, each time you are buying, it is reducing your average price, reducing your average price. And eventually, you are not waiting for the main percentage that the market has dropped, for the market to recover by that percent before you start selling. No, you start selling at the shortest possible time when your own drop begins to recover. The difference between these and the last one, which we normally use most times, I also use this last one most times. I use it most times. Is that and below. That means the fifth instruction to buy and below. All right. It is not grouped together with every other one. If 1 to 4 is considered, that is what will be used That is the reference. That is the reference that one we use before it can sell. All right, the average price, that's what that one we use. But for the 5th, 6th, and 7th and below, those ones are in their own they are isolated on their own. They are different and separate positions. So the 5th margin call will consider its own price, all right, before it sells. 6th margin call will consider his own purchase price before it sells. So the difference between this sub-bin route will be computing your average based on your entire asset, and sometimes that might sell quicker. But again, another advantage with the real time settlement is that whatever you are buying at the 6th or 5th margin calls, they can sell at the shortest possible time if there is a slight upward movement in the market. So depending on your options, you can decide whichever one you want. This trade, as you can see, has made 4 margin calls already. Where are the margin calls it has made? I'll show you. Look at the margin calls it has made. It has made margin call at 2%, at 5%, at 5%, and at 10%. All right? So you can see now that it couldn't even get up to 40%. All right? It had made margin calls at all of these percentages, and what I asked it to buy only is just 10% of my initial capital. All right, it's just buying 10%. I don't want that. Now, the reason I'm buying something small at this initial point is that I want that when it is buying at the 5th margin call, which is 1 times, all right, I want it to slash whatever drop it has already. I want it to slash it by at least half. So if the market has dipped up to 15% at that point, or if I have lost up to 20% at that point, let's suppose, immediately I buy this one, it's going to slash it to about 10 or 11%. All right, so that will help me in order to recover from the market faster. So that is that. And one more thing I want to explain very quickly. You can see something there where you see margin call limit. Okay, 7, not that. The whole position take profit ratio. So what is happening there? For those who are asking what these things actually mean. So whole position take profit ratio is the percentage at which you want the bot to be prepared to take profit. Take note of that. This is how I like explaining it. So you said when my whatever I have has increased by 1.5%, prepare to take profit. So what now determines exactly when it will take profit? That's the next thing there, which is called whole position take profit callback. Whole position take profit callback. That is what will determine when it will take the profit. In fact, that is what will determine it. Whole position take profit callback. So what is happening here? If the price gets to 1.5, yes, be prepared to take profit. But if from that 1.5 there is a drop in the price by 0.05, then take the profit at exactly that price. I repeat that. 1.5, you are preparing to take profit. If this next option, all position take profit, this next option of all position take profit callback, if this were to be 0.0, the meaning is that at exactly 1.5, my bot will take profit, meaning that it will sell it, remove the profit, and buy again. The capital. All right, 5. It will get ready to take profit. It will take the profit at exactly 1.45. Slippage. So slippage and the actual price you eventually buy, because the market has a very high level of frequency. So you might be seeing something for your market order. Okay, you think that this is the price they'll be giving you, and before you make your order, the price might change a little bit. So that is what you call slippage. Okay, so another question you want to ask is this: what if the price does not come down from 1.5 and goes up to 2.0, and from that 2 there is a drop of 0.05? then it will take profit at 1.85 or 1.95, sorry. It will take profit. So in that case, you will now see that you are seeing a profit that is more than what you have set. That is intelligence that we are talking about that is built in the bot. Okay? So the other time I was talking about you buying cheaper than your sell price. This is where you configure that buy in callback. This place, buy in callback. So if you want to buy, let's suppose you sold a coin at $47 and you want to buy it at $46, suppose. So, okay, let's say you want to buy it at 1% below $47. You can include that here. Now, this instruction, take note of this instruction, is not literally the exact way I'm explaining it. So what this means is that at whatever price the coin gets to, if it goes down by 0.3, then buy the next buy. Make the next buy. So if you want to compute what percentage $46 will, what percentage $47 will actually drop to before I can buy at $46, you need to compute that and include that here. The reason why this is dicey is that this callback is a one-time drop, like a sequence drop, continuous drop, meaning that it has dropped 1, drop 2, drop 3. So if it is dropping 0.3 in that order, that is when it will actually buy, not an aggregate drop or a change over a period of time. So it's always dicey. That's why you include a very small value here, so that after you sold and remove your profit, that price at which you sold, you are saying if it drops by 0.3, buy another one. And then it keeps this cycle and keeps this cycle going up. Now, another interesting thing I want to show you is this. I said it the other time. Your 1 to 4 is actually grouped together as a bean. So they are grouped together. Let me kind of do a check. How many people are still following me here? How many persons are still on board?
Yeah, Mike is still on board.
All right. Thank you, Mike. Thank you. All right, so we'll continue. So what you're saying in the 5th, 6th, and 7th margin call is that these positions are quite separate compared to the 1 to 4. So 1 to 4 are grouped together. At whatever prices the bot is buying, is going to compute a single price as an average price for the entire asset you have together that you bought from 1 to 4, including your first buy. So it will be waiting to sell relative to your what's it called now? Relative to your average price. But the 5th, 6th, and 7th are separate positions in their own right, meaning that you can determine at what percentage you want to take profit. For my strategy, I'm saying that if the market becomes so bad that my 7th margin call was called indeed, then I want to make some good profit from it. So I want to make 10% profit on my 7th margin call. I want to make 8% profit on my 6th, and I want to make 5% profit on my 5th margin call. Whereas the 1 to 4, I'm only making a profit on 1.5%. That's what you see here, 1.5%. Okay, so that's the beautiful part of this whole thing you're seeing. And the callback thing is similar to what we have explained in the other one up there. All right, so what other thing do we have here that we want to touch? Maybe I'll leave that to questions. And so I talked about our plan to teach us about strategy. This is exactly what I have communicated. So in case you are wondering, I'm sure that some of us on this call have not actually registered. I might be wrong. So in case someone is wondering how you actually want to construct your own strategy, you need to understand this mindset behind how this thing works. All right? You need to understand how it works so that you can think in that line and construct your own strategy either for the short time or the long time. If you don't want to give it too much of monitoring, then have a flexible strategy, because you're actually investing for a longer time, and that's even I mean, that will keep your mind at rest more compared to someone who just want to make some quick profit from a bull market using the bot. Okay, so for now, I want to believe I have been I want to believe I have touched on most of the things I planned on touching. At this stage, I would request if anyone okay, I also talked about yeah, I talked about circles. So let me show you. We have a circle already here. So if you are coming on board, you can just go onto this circle, all right, and connect with this circle. So what you quickly do, what you do is that once you are here, you see a button to the bottom right, because this is the circle owner itself. You don't see that button here. So there's a button to the bottom right where you see, or the center here where you see join, all right. So when you click on that button, you join, and then you'll be able to connect with my strategy and synchronize with the strategy, and you'll be safe. So whatever is happening in the market, if I feel there's a need for me to do something about the trade, I will correct it, and when I correct it, you immediately see the impact, with you. All right. So that's all for that. All right. Let me use somebody's strategy to give an example of that. Yeah, that's a good one. Let me use somebody's strategy. Let me use this. So this is how it will look like. No, there should be another one that I have not joined yet. All right. This is how it will look like typically. All right. So suppose this is my strategy. Suppose you click on apply. Once you are inside the strategy, okay, you click on this, what you have here. What I'm actually clicking on is, let me go back. I'm clicking on that name, Crypto Calf Strategy. Mine will be Duke QQ Strategy. So once you click on that, where you have 6,592, whatever. Once you click on that, all right, you are going to see this information here. So what is this information? Now, don't be deceived. Whatever you are seeing here is dependent on how long the person have been using the bot. Take note of that. It's dependent on that. And then secondly, if the person's strategy is actually good enough, it will also affect how much percentage this person has made. For example, those of us that are joining not too long ago, we know that Doge has not really performed that well within the past 1 or 2 months. All right. So, but for him, over his trading period, he had made more money from Doge compared to the other. So, if you see some of our own strategy right now, you may be seeing Shiba Inu or Solari or Solana, sorry, and maybe Avax, all right, Avalanche. You may be seeing those ones at the top. Okay, even his own Avalanche also, Avas, is still among the top 5. Okay, so, but you don't get to select which one you want to choose. That's the part of it. So the bot has an algorithm to give you the best option. So once you click on synchronize here, synchronize strategy, so you just need to type here the amount of your first buy. If your first buy is $20, you type it here, and then this will give you the number of strategies you want to open. How many coins do I want to open to start trading now? You type that here. Let's suppose it's 2. You don't need to touch this double except you want to double the positions. Meaning, for if you are opening strategy 1, for strategy 1, for example, let's say strategy 1 was Shiba Inu. Everything you are buying on Shiba Inu will be double. You are buying $20, $20 will be in 2 parts. That is the meaning of this double. So you don't need to do that. Immediately you have done this, you just click on this synchronized strategy, and 2 best coins will be chosen for you by the algorithm of the bot, and they will be listed. You go back, you see them, they'll be listed here. All right, and that's it. You start trading. you start trading, and that's just that. I think not too long ago I made a profit. Okay, good. It's quite encouraging. Dots have been, some of us had when Mark was asking the question the other time. Dots had been kind of stagnant for some time, and today it came up from slumber and started delivering profits. That's encouraging, right? Even from my two different exchanges. So I decided to show you my account for you to know that this thing is real. There is no there is no there is no hidden thing here. If you really want to come on board, I would advise you do it very quickly because we are in the beginning of the bull run. What Bitcoin will do now, only God knows, because it might get up to 100,000 plus. And if you've been following the news, also what is going on in the US with the ETF and all those financial news, it's going to be a very big plus for the crypto world. All right. But in any case, whether the market is going up or down, you have an advantage with the bot. The bot will buy for you when the market is going down, getting ready to sell when there is an upward movement, and the bot will keep on selling for you at the upward side and shedding your profits. And if you decide to go on the referral route, you have enough benefit, more than enough benefit. So I'll leave the rest to you while you make your decision. If you are considering taking a step, I'm very sure somebody must have invited you to this call. Try and get back to them, and they should.
Hello?
Guys hear me? Am I still audible?
Yeah, we can hear you. Hello, Mike on the line.
Yes. You have any questions, please?
It's not a question per se, but I just want to appreciate your lecture. It has been a very eye-opener. I myself, I'm just coming to the board. Somebody sent a link to me, and I'm interested into this project, into this trade.
Okay.
I don't know, my fear was the security of it and how secure the site is. Of course, the guarantee of our investment too. Very interesting one, and I enjoyed every bit of given to us.
Okay. Okay.
I would like to have your numbers that you have from your board.
Pardon? Could you repeat that?
Somebody refer me to this lecture.
Okay. Can you hear me, please?
Yeah, I can hear you. Can you hear me? Hello, Mr. Joe, can you hear me?
Yes, I can hear you. I can hear you now. I can hear you now. Go ahead, sir.
So what I'm saying, I'm just a layman to say it. This is my first time to attend to this.
All right.
Please send a link to me. Actually, he has been talking to me about this platform.
Okay. Beautiful.
I've been having fear about the security aspect of it because we have witnessed a lot of things like this in time past, how they come and it go down the drain and people love it. So I wanted to know the position of the government, if have anything to do with the CBM or whatever.
Okay. I'll clarify everything to you and put your mind at rest. So thank you very much for your contribution. Thank you for the encouragement. So when it comes to security, just a moment, and